All right, let's get right into it. It is January 7th, 2026, and if you've looked at the crypto charts today, you know it's a sea of red out there. But listen, this isn't just another dip. We're in the middle of a brutal, full-scale restructuring, and you need to understand what's really going on.
And that brings us to the big question on everyone's mind. Are we watching a market crash in real time? Or is this something else entirely? Is this a calculated takeover by the biggest players in finance? Let's break it all down.
So first off, let's just acknowledge the pain. You're feeling it, I'm feeling it. This isn't just a minor pullback. What we're witnessing is a deep, systematic cleansing of the market. It's designed to shake out the weak hands and target very specific sectors.
I mean, just look at these numbers. Bitcoin is plunged, now struggling to stay above $91,000. Ethereum is fighting for its life at that $3,100 mark. And the meme coins, the Doges and the Pepes of the world, they're absolutely bleeding out after yesterday's blind euphoria. This isn't random, folks. This is a targeted execution.
The sheer scale of this move is just staggering. We're talking about over $500 million, that's billion with a B, in long positions getting completely liquidated. And this wasn't just retail traders getting scared. No. This was a coordinated wave of selling led by huge, institutional-sized players, mostly coming out of Asia, and they wiped out anyone with leverage in the blink of an eye.
So, what on earth is causing all this chaos? Well, this is the core of what you need to understand. The institutional era isn't some future prediction anymore. It's here, right now. Wall Street isn't just dipping its toes in crypto, they are systematically moving in and taking over the entire plumbing of the digital asset space.
Need proof? Here's Exhibit A, Morgan Stanley. In just the last day, this financial titan filed for an Ethereum ETF, and that completes their trifecta. They now have applications in for Bitcoin, Solana, and Ethereum. That is a massive signal. They don't just want a piece of the pie, they want to own and control the core assets of this entire ecosystem. And then you have BNY Mellon, one of the oldest banks in America. They've just quietly launched a huge stablecoin reserves fund. Now, this isn't some flashy, speculative bet. This is them building the very foundation, the bedrock of liquidity that the institutional crypto market is going to run on.
And it's not just happening in the US. Look at Barclays. They just poured a major investment into Ubix, a platform that's all about stablecoins and tokenization. You see the pattern here? The world's biggest banks are skipping the hype, they're ignoring the memes, and they are going straight for the core infrastructure. They're literally building the new financial rails right under our noses.
So, let's just properly define what we mean by the institutional era. It's this monumental shift. Wall Street is moving from just passively buying a little Bitcoin to actively building and controlling the core infrastructure. They're not just investing in crypto anymore. They are weaving it into the very fabric of the traditional financial system.
And this perfectly captures the tale of two markets that's playing out. On one side, you have the retail focus, the high-risk altcoins, the meme coins, and they are getting absolutely crushed. On the other side, you see the institutional focus, quiet, strategic, long-term moves into the boring but essential stuff like stablecoin infrastructure and tokenizing real-world assets.
Okay, so how in the world do we navigate this new landscape? The key is to understand that these institutional moves are what's really driving the price. You have to learn to ignore the noise and focus on the real signals. So let's look at the key technical levels and the bigger macro forces that are truly in the driver's seat right now.
In the very near term, it really all comes down to two numbers. For Bitcoin, the absolute line in the sand is that $88,000 zone. If we lose that level, look out below because we could see a much bigger sell-off. And for Ethereum, holding the psychological and technical support at $3,000 is absolutely non-negotiable to avoid a complete technical catastrophe.
Now, if we zoom out a bit, you can see the market is in this giant global tug of war. The headwind, the thing pulling us down, is this record-high correlation between Bitcoin and the Japanese yen. It basically shackles crypto to global monetary policy. But the tailwind, the thing pushing us forward? Here in the US, we have a Republican-led SEC, which is signaling a much friendlier, more favorable regulatory environment for the rest of 2026. But to really get a grip on the current power dynamics, there are three very specific numbers that I am watching like a hawk. You could call these the new rules of engagement.
First up is Bitcoin dominance, sitting right now at 58.3%. This basically measures how much of the entire crypto market cap is just Bitcoin. Now, why does this matter? Well, if this number starts to creep up towards 60%, any hope you have for a broad altcoin season could be put on ice indefinitely. All the capital will just consolidate back into Bitcoin.
Second, let's look at the Crypto Fear and Greed Index. Today, it's at a 42, which is firmly in the fear zone. This tells us that the psychology of the market is incredibly fragile. It's on a knife's edge. Any more bad news could easily push this into extreme fear and trigger another waterfall of selling.
And the third number is a bit more complex, but it might be the most important. It's the yield on Japanese 30-year government bonds. I know. Why should you care? Because as these yields rise, they act like a silent killer, quietly sucking global liquidity away from riskier assets like stocks and, you guessed it, crypto. It's a subtle but powerful drain on the entire market. Now, as we look past all this immediate turmoil, there is one single event looming on the horizon, an event that has the potential to be a detonator for the entire macro landscape.
So what is it? What's the single biggest event out there that could force the entire market to reprice all of this risk, not in weeks or days, but in a matter of minutes? You're going to want to mark your calendars for January 9th. That's the day the U.S. Supreme Court is expected to rule on tariffs. This decision has massive implications for global trade and monetary policy. It could be the catalyst that either finally breaks this market's back or signals the major macro pivot we've been waiting for. All of this brings me to a quote I read that just perfectly captures this moment. An analyst put it this way: liquidity is the bloodstream, and Wall Street just installed their blood-sucking machine into your veins. Don't ask why you feel dizzy. It's a pretty stark image, right? But it hammers home the point that the game is fundamentally changed, and these new players now control the flow of capital. Which leaves us all with one final, crucial question to think about as we try to navigate this new world. With Wall Street now at the table, feasting on the market's inefficiencies, you really have to ask yourself, in this new institutional era, are you the diner or are you the dinner?